we highlight this as the key investing theme for 2026 is the moment for Europe to seize on the savings and investment union and really actually moving to close the private pensions gap, where pensioners in Europe in the private space hold less than 10x of what they have in the United States. So for macroeconomic reasons, right, just slowing growth, demographic reasons, geopolitical forces that you mentioned of the US withdrawal and isolationism, means that Europe is going to have to step up spending on infra. And we've seen this obviously with the Merz team and Germany actually ticking up in growth. And we see this across the board with insurance companies needing to find assets that will generate returns over the long term.
I don't see it. I got a Draghi letter out that everybody hangs on, and I'm sure you read every word of it and responded to it. Lagarde's been talking this up for years, and on and on and on. I'm at Café Saint-Roger in Paris, and everybody around me is 50 years old and retired. That's the reality. They don't want, I'm sorry, they don't want to work. That's all there is to it.
Ooh, those are fighting words, Tom.
I'm sitting there in the cafe having a perfect omelet. Everybody's reading Le Figaro and whatever, and they're going, Macron.
Can they have cigarettes there anymore? I don't know. Yeah.
They all retire at 50 years old as a stereotype.
All right, so we've got the situation in France, and France usually sits a little bit between Northern and Southern Europe, particularly on the fiscal side. What you do have is a cultural shift where Germany has removed the debt brake. As we know, Italy has also remarkably reduced the fiscal deficit. So the situation in France, which you acknowledge, yes, it's a hot button topic. Unfortunately, it's their own version of myopia when it comes to the policy debates. However, you have a record high labor force participation rate actually coming out of COVID. You've actually got record amounts of capital coming into the startup space. A lot that the Macron government has done in the orange economy. French workers are actually working more hours. They're working more hours on the weekends. We actually see this in OECD data. What I think really needs to happen, Tom, is that you've got to have consolidation of Eurozone lenders. That's where we really start to see the ability to move non-performing assets out of banks that are earning negative yields and into a different type of financial asset.
So Paul Donovan at UBS talks about this. Are you talking about a bank roll-up? I don't see it. I mean, David Harrow and I have been waiting a long time to see cross-border bank mergers.
I still think this can happen.
Okay. How much is the ECB a part of everything that you're talking about and a part of sort of this leg up, perhaps, that Europe can take in 2026?
Thank you, Alexis. So I actually think some of the coordination between regional lenders and the central bank is underestimated, right, in the extent to which they can drive this forward. You speak to some of the G-SIB CEOs in the Eurozone, they're very focused on this. And so I actually think their coordination with the ECB can move this forward. We've seen Madame Lagarde actually say, hey, we need to have more sovereignty when it comes to payment systems. Maybe we should move off certain, US credit card providers. And I think that's real.
Tell me about James Dimon, and he's got a digital experiment in the United Kingdom. Can the American banks go into Europe and do American banking? Culturally, can that work? This is what you're expert at.
It's interesting. So not only just on the digital asset side, but just on the consumer bank side. I was actually speaking about this last night with a client. I mean, American banks can do retail very well. And so I think there is space to do that, not only in the UK, but also across the Eurozone. The other side of this as well is when we talk about the ability to close the pensions gap and take a book out of Wall Street, what I think also needs to happen is you've also going to see Latin American banks coming in and supporting pension and investments. So it's not just European banks. I do think that American banks will have a space.
Alexis Crow, this PwC, we continue an extended conversation here. We had Golnar Montavali in earlier from London and Iran, but this is a treat, and it lines up for the transatlantic soiree. I talked to Pharaoh.
Yeah.
Okay, he's got new lederhosen this year.
Oh, I'm so happy.
Over to Davos. They're going to be over in Davos. Bramo. I think Anne-Marie Horton's going as well.
Okay.
Because the president will be there.
Yeah, it's going to be crazy.
I've been there when the president was there. So I have this, you're going to love this, Alexis. You know what it's like. They call me up at the World Economic Forum and they go, Tom, we want you to do a seminar. And Dr. Schwab wants you to do it. So they line me up with this total killer seminar, anticipation, packed room. Unfortunately, 2 rooms over is
no.
the Secretary of Treasury, Steve Mnuchin, on a spur of the moment notice telling people all that. The entire room was me, 4 panelists, and Adam Tooze sitting in the middle of the room empty. That's how Davos rolls sometimes.
I would have sat in your session, though. Don't worry, Tom. But when you look at geopolitical tensions right now, we were talking earlier in the show about how the U.S. market has really largely been ignoring what's happening in Venezuela and Iran, and at least for us in Greenland. Is Europe going through the same thing? Are they no longer thinking Ukraine? Are they now not thinking Iran?
Great question, Alexis. And I think we really have to retract back outwards and say global markets. And global markets, by and large, do not care about geopolitics. They shrug it off, right? Interesting that the single largest spike that we had in the VIX, in the volatility index, happened when investors and market participants were concerned about an unwinding in the carry trade with Japan. So it's not geopolitics. It is monetary policy.
Thank you.
That really
Thank you.
moves
She's talking my book. Continue.
today. It is our addiction to the cost of money. It's Sintra, it's Jackson Hole. Now, of course, what's interesting, the elephant in the room, is what happens when some of these two converge, right? And political risk, monetary policy, and that's something that we're facing in the United States today.
Okay, can we do an audible here? I got to do this. I mean, Alexis, folks, you look at her bio and it's like, okay, did you have any fun in school? Like all she did was work. It was like, get a life, Alexis Crow. We're this with PwC. I got all these the hot air, Alexis, and I'm sure at PwC, it's the same way, AI, From where you sit, is AI going to replace intellectual input into the service sector of the United States of America?
I know this is some of your headlines on the data surrounding labor markets and the banks here. When we think about the growth of private assets, private markets, alternative assets, and the need for highly specialized analysis and intelligence surrounding this, that's the type of job that AI doesn't touch. It can augment, but it doesn't necessarily touch. So I think we're going to have to move higher up the skill chain. Actually, where markets are growing in terms of private markets means that you will have to analyze it.
But somebody at LSE who did differential equations like I didn't, is the whiz kid from your LSE, is he threatened by AI at 24 years old?
It's all about relationships. This is the one thing that we're training people to do. It's all about the way in which you engage with clients, the way in which you can be nimble and flexibly respond. And that's not something that's necessarily taught in the classrooms.
You're a linguist. I mean, I'm looking at your bio. All right, obviously English. French, Spanish, fluent. Working knowledge of Italiano. Parlo poco Italiano.
Yeah, well, Golnar's the same way. She has 4 languages. If you don't have 4 languages today, you can't rock.
And Portuguese, let us not be. And I have another question for you, Alexis, just quickly. We'll get back to business in a moment. Do people call you Alexa? Because it really frustrates me. Like by accident. They want to call you Alexa, and then their Alexa goes on if it's in the room.
You get that a lot?
I get it.
The thing that perturbs me more is Alex.
I think Alex is kind of cool. There's a cool factor to Alex. Just don't call me Alexa. It's just
with Sweeney, I talk Duke basketball. This is Lisa. This is just like, the level of girl talk this week has just been
between
too
blue
much.
jeans. I mean, Tom's just trying to jump in here. Earlier when we were talking about oil and the Strait of Hormuz, I saw you next to me like nodding your head.
Yeah.
Talk to me about oil and a market there that seems to be ignoring all of the geopolitical risk around it.
Okay, it was right to ignore Venezuela. Okay. And so market participants completely underestimate or overestimate the extent to which Iran and Venezuela can bring supply to the market. So maximum I think Venezuela can bring is 0.7 million per day, which is a dent in global oil supply of 100, a demand of 100. So I was nodding because 20% of the global daily final demand comes from the Straits of Hormuz. And to your colleague's point, it doesn't necessarily just need to be Iran that would take an action. Any congestion in the Straits of Hormuz could stop that. It's not only 20%, it's also the lowest cost, right? And so it's integral, as we know, this has become integral to European final demand as well.